Hello guys, welcome to the accounting class. Today we are going to take this chapter, reporting and analyzing equity. In this chapter we will discuss the MCQs. So let us begin the MCQs. The first MCQ is, which of the following is not an advantage of the corporation, form of business or nation? So it is asking not an advantage. Limited liability of the stockholder is an advantage. So we cannot say this is the correct option. Continuous life, the life of the business will go on for long period of time. So this is an advantage. We cannot say it is not an advantage. Government regulation, with the too much government regulations, it is difficult to form a corporation, form of business or nation. So the government regulation is one of the disadvantage, and we can say it is not an advantage. And ease of capital formation, capital can be easily formulated, can be easily collected, a large amount of capital can be collected, so it is the advantage. Okay, so we cannot say it is a disadvantage or it is not an advantage. So the correct option will be the government regulation. Now next question, who has the ultimate control? Who has the ultimate control of the corporation, form of business or nation? Ultimate control, the final control. The final control is in the hands of the common stockholder, not in the board of directors. Board of directors have the control, but it is asking the ultimate control. So it is not in the hand of the board of directors, not in the hands of president, neither in the hands of the vice president. It is in the hands of the common stockholder. Board of directors of a corporation are elected by. So who elects the board of directors? Actually, why the common stockholders have the ultimate control? Because of this reason. The reason is that the common stockholder have the power, have the right to vote in the annual general meeting, and by their vote they can elect the board of directors. So this is the power, and because of that the board of directors are elected. So it is asking board of directors are elected by whom, in fact. So it is elected by common stockholder, not by employees, not by president of the organization, not by a common public. Stock can be issued, it can be issued at par, it can be issued at discount, it can be issued at premium. So if you write only issued at par, it will be partially correct. If you write only at discount, it will also be a partially correct. If you write at premium, it will also be a partially correct. The full correct answer is option number 4, which is giving you at par, at discount, at premium. So the correct option is 4. Khalid Limited issued 4,000 common stock of SAR 10 each at 50 per common stock. Find the amount credited to common stock. Amount credited to common stock is the par value. So 4,000 share, the par value is 10, it become 40,000. So 40,000 is the amount that should be credited to common stock. The correct option is 40,000. Okay, it is not these option. Abdullah Limited issued 2,500 common stock of 10 at SAR 11. Now find the amount paid in capital in excess. So excess value is this one. It was of 10 issuing at 11. So 1 is the excess value. Okay, excess. So find the total amount of paid in capital in excess. Total amount will become 2,500 into 1, that is 2,500. So the correct option is 2,500, this one. Okay, next, a share of actual price of 100 is issued at 93. So this issue is called because the par value is 100 and issue price is 93. Okay, so here you will see that 93 is less than 100. So if the issue price is less than the par value, it is called at issue at discount. So it is at discount, it is not at par, not at premium, not at excess value. Actually, this is not any correct option. There is no excess value like that. We have only three types of the issue: par, discount, or premium. So this is a issue at discount. Next, Khan Limited issued 2,500 shares of 10 each at a discount of 10%. So 10% discount is always discount or premium is collected on the face value. So find the amount debited to cash. Amount debited to cash will be the amount collected. Okay, so actual cash collection will be 10 minus 10% of face value. So this will be 10 minus 1, that is 9. 9 is the cash collection. Okay, cash collection for one share. So for 2,500 it will become 22,500. Okay, so the amount debited to cash will be 22,500. Now it is asking important dates related to the payment of dividend are important dates related to the date of payment are date of declaration, date of record, and date of payment. All three are correct. So all three are in the option number 4. So correct answer should be option number 4: date of declaration, date of record, and date of payment. The effect of cash dividend. What will be the effect? It will reduce cash. Yes, if you are making payment of cash, so cash will reduce cash, of course. So this is right, but we don't have to choose this as an option. We have to look at the other option as well. Secondly, it reduces the retained earning. Yes, any type of dividend will reduce the retained earning, because you know that the dividend is deducted from the retained earning. Okay, so when the dividend is deducted from retained earning, so it will reduce retained earning. Now it will reduce total assets. Yes, of course, because if it is reducing cash, so it means it is reducing the assets, because cash is a part of the assets. So if cash is reduced, it means asset will be reduced. So it will reducing the assets. It will reduce total equity. Yes, it will reduce total equity, because if retained earning is reduced, it will reduce equity. Why? Because equity is equal to common stock plus retained earning. Okay, so if retained earning is reduced, so of course equity will reduce. So the correct option is the third one. This one is also correct, second is also correct, first one is also correct. Now go to the fourth one. It will reduce cash. Yes, it will reduce cash. It has established from the first option. Retained earnings. Yes, it will reduce retained earning from the second option. It will reduce total assets and total equity. Yes, it will. It is also established from the third option. So even the third option, if you choose only third, it will be incorrect, because the third option does not give you the reduction of cash and retained earning. The option number 4 is giving you the fully correct answer. Option 1, 2, 3 are correct, but partially correct, not fully correct. So you have to give the full correct answer. The full correct answer is the fourth one. Now a distribution of 25% or less of the previously outstanding shares. It is very clear, 25% or less of the outstanding shares, if distributed as dividend, it is called small stock dividend. Not large, not medium, not micro. There is no term like micro stock dividend. It has been given just to confuse you and to create the fourth option. Only small stock dividend is the correct option. The next is, which of the following is the date the directors vote to declare and pay a dividend? The directors vote to declare and pay a dividend is the date of declaration. The correct option is date of declaration. It is not a date of record, not a date of payment, not a date of settlement. The journal entry of the cash dividend is not made on which of the following date? Do we make any journal entry? So we make a journal entry on the date of declaration. So this is not the answer. we make a journal entry on the date of payment. So this is not the correct answer because it is asking the journal entry on which date not made. So we make on the date of declaration. So it will not be the correct option. We make a journal entry on the date of payment. So it will also not be the correct option. The date of declaration and date of payment, we have already established that from option 1 and option 3 we have to make a journal entry. So this will not be the correct option. The correct option will be the date of record. We don't make any journal entry on the date of record. I will clarify you that the date of record is a date on which the record is checked. Record is checked to see that who is the stockholder, who is the shareholder to whom the dividend is to be paid. This is called the date of record. Stock dividend. Now what happens with the stock dividend? Stock dividend will reduce the assets? No, it will not reduce the assets because it is not to be paid in cash. So it will not reduce total asset. It will reduce total equity. It will not reduce total equity. Why? Because in case of dividend, it will reduce the retained earning. Okay, but at the same time it will increase the common stock. So one amount, suppose 50 is reduced and 50 is increased, and the sum of the retained earning and the common stock is equity. So if 50 is minus and 50 is plus, so what will be the effect here? It will be have zero effect. So it means in case of the stock dividend, the equity will have no effect. So it is written reduces equity. No, it will not reduce equity. Has no effect upon total assets and total equity. Yes, this is a correct option. Increases total assets and total equity. No. So third option we find is the correct one. A small stock dividend is a distribution of 25% or more. No. 25% or less of the privileged stock outstanding shares. Yes. 25% more than 25% of the previously outstanding shares. No. Only 25%. No. The correct option is the second one. Now to pay a cash dividend, the corporation must have sufficient balance in the retained earning. Yes, it should have a sufficient balance without having the sufficient balance in the retained earning, because you know the dividend is deducted from the retained earning. Okay, so you should have sufficient amount in the retained earning, then you can pay a dividend. So the first one, okay, we don't mark it correct, but first one is okay. Necessary cash balance, yes. The second one is also okay. For making the cash dividend, you should have the necessary cash. Third one is both sufficient balance in retained and necessary cash. Yes, of course. The third one consists of option 1 and 2 both. A definite number of common stock outstanding? No, it is not required. So we get the third option as the correct one. Okay, because it consists of 1 and 2 both, and both are required. A stock split can be done in the ratio of stock split, dividing the stock into 2 or more. For example, if there is a stock of $10, $10, and it can be divided into a stock of $5 into 2. This is called a stock split. So it is possible in any of the ratio, whether it can be 2 for 1 or 3 for 1 or 4 for 1, any. So it can be done in any of the ratio. At the time of payment of dividend, which stockholders get priority? We have two types of the stockholder: common stockholder and preference stockholder. Always preference stockholder, its name is preference because of the priority. So preference stockholder get the priority over the common stockholder. So common stockholder do not get priority. Preference stockholder get priority. None of them get priority. No, preference stockholder get priority. sometimes common stockholder while sometimes preferred stockholder? No, it is not. Of course not. Always preference stockholder get the priority. So this is the correct option. Now at the end, I give you one question for practice. Now it is your turn to solve this question and give your answer in the comment box. Which of the following is not true? Not true regarding preferred share or preferred stock. Okay, give your answer in the comment box. It has priority over common stock. It has fixed percentage of dividend. It has no voting right. Corporations with no preferred stock or less in numbers as compared to corporations with preferred stock. So 1, 2, 3, 4. Which one is correct? You need to give the answer in the comment box. Thank you so much. Hope you enjoyed the video. See you next time, inshallah, in the next class. Till then, good luck. Bye bye.